21st August 2023, Monday, MAO with Cal. Why a technical recession could happen in September, October, right? This is something that I've been preaching, I've been telling, and it is seemingly happening. Now, of course, you will say that, nope, look, there is no indication from the GDP numbers that is going negative. Yeah, I understand that. But if you actually look at the numbers and the statistics and the data, there's a global movement downwards now. There are this shortage of funds moving around because of all the tightened liquidity and credit. And most important thing is this, the buying power of people is actually going down. And all this is going to spread to lead to a global recession and a technical recession for US side. So let me explain this more to you in great details. Let's go. All right. Now, first of all, very important is disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. Now, 2 weeks ago, we warned about S&P 500. Remember, I put there S&P index, an insane, powerful trend line since 2020. And I basically warn everyone about this. I believe that you have probably watched this and you will know that the S&P really start coming down back then. As you can see on the screen right now, the S&P, the Boyce indicator, has been selling since the 2nd of August. And that is where we started to tell people that the Boyce are selling. And after that, itself, for the next few days, the market kept going down and it went all the way down to touch the technical level that we mentioned. That's 43, 41. And you can see right here itself, we have basically purchased back all our short position at the same price and of course profited handsomely from there. So this is how the TWB system works. When the boys are selling itself, we need to be very careful, even though there could be intermittent recovery. But as long as the momentum tells us the sellers are still there, you can see that the market really cascaded downwards. And of course, we will tell you more how we feel about the US crude very shortly. Now, with this understanding right now, you can see that European gas prices jumped nearly 40% as Australia's supply fears, okay? Now, the analysts are all expecting a further rises, and of course, this can actually stroke the crude oil even higher. And because of that now, global rice prices is expecting to go higher. In fact, it surged to 12-year highs, and it could go even higher. So all these shows that the second whip inflation is coming in, something I warned about a week ago. And if this is going to continue, there's no way the Federal Reserve is going to cut interest rate. As a matter of fact itself, right, it has a very high chance interest rate will go even higher. And I'm still looking at the number 6% to reach. Now, think about this right now. The market is really at 5%. We have a lot of banks not performing as well. So imagine if you go to 6%, I cannot imagine what happened to Wall Street itself. So there's something that I need to inform you, and I believe that, right, we could see a 5.5 probably by October period. So now the thing is this, for this week, we have the tomorrow there'll be existing home sales, right? Then building permits. Now all these are not very heavy data, but the one that are looking at the initial jobless claim. Now, if this number goes past 240,000 jobs, this will mean that what we've been fearing is coming in, because when there's tightening, usually the next to go will be the jobless claims. And if these are going upward itself, that means that we are riding nearer to recession. Of course, the Federal Reserve will say that, no, this is not, because it's just part and normal of the pain involved. But we all know that if we follow the SOP, this is going to happen. And on Friday, Jerome Powell will be speaking, and obviously everyone will be looking at what he says. And I believe that hiking rates will be one of the main agenda. But the most important thing for tomorrow is this. There is the BRIC summit, right? And this is going to be very critical. You'll be, South Africa is hosting it this time around, and everyone is going to look at how their position is. We all know that now they are probably challenging the reserve currency, which is US dollar. And of course, if this is going to continue, right, this will basically weigh down even more on the US treasuries. And if that continue to happen, that will shift a lot of cracks beneath it. And of course, stock market will be one to be affected, yeah? So you can see right now, right, back then, we were calling for crude oil. Remember, this was a day that we call crude oil. Let me show it to you. All right, so about 20th of July, we believe that crude oil will go higher. Now, back then, crude oil was trading about $80. We mentioned to you that crude oil will go up to 83.11, and you can see what happened to crude oil price. That was 20th of July. Crude oil price really went up to 63.11. So within a few days, our target was met, and of course, everyone was happy. So the question is this right now, what's next, right? So for crude oil, it's critical, because if crude oil price goes up higher, definitely energy will go higher, and that will spill over to inflation side, because all the commodities will go higher, and that is where you will see the US in those catch-22 positioning. Because if they want to high interest rate to deflate inflation, then of course that will basically hit the banks. So you can see right now, that's the reason why the treasuries, no one want to buy it, because they know that it's just a matter of time. Eventually, the US Federal Reserve will have to cut interest rate. So at the moment now, for the US crude oil, the KSI or Big Boss indicator is showing selling activity, but prices is going up. Now, this is not a good sign, because if prices is going up despite the KSI is red, then if the market turns to green, that means the boys start to buy, this could propel the crude oil all the way to 84.17. So that's the reason why I believe that 84.17 could be traded later this week. And of course, the BRIC meeting itself, right, I think that will push up, because the Saudi is definitely looking to push crude oil price higher, despite the US not happy with this. But you can see from the prince itself, he doesn't care, he doesn't bother. He already said before, he's not going to appease the American. So if this is going to continue, right, we're going to have a bit of problem here, because the delinquency rate is going up right now, and it's even higher than what happened back in 2008. Now, this is really incredible, because this is where the Lehman Brothers time happened, and yet we are now even higher. So let's put a simple number here, right? So you can see that on average itself is about 20%. We will have the recession. So if now we are nearly 50%, what do you think will happen? Recession, exactly. That is the reason why we are kind of worried right now. And you can see now this is a monetary policy for last 15 months lag. So what I'm trying to say is this: when the 10-year and the 3-month treasury yield spread, right, become negative, you can see that almost every time when it happened, 15 months later, we will get to see a recession. So the first time when it inverted, it was back in August last year. So if August last year plus 15 months, that will give you exactly about September, October period. And that's the reason why I kind of believe that this is going to happen again, which means by September to October, we could see the stock market really going down before bottoming out for the rally. All right. So we expect the market to go down first, then hit a bottom, a real bottom in the market. Then we can see the recovery coming in. All right. So what do you think? Let me know in the comment box. I'd love to hear from you. And most important thing is right now, you can take a look here yourself, the tightening credits. All right. Now, do note, if the banks are tightening, you don't expect things to be any better, right? Okay, let me just bring it back to some here. Okay, you can see, right, and every time when the banks are tightening at a very alarming speed itself, you can see when tighten at a very alarming speed, you see recession. It happened back in 01, 02. It happened again in Lehman Brothers time. The level is the same, and of course what we have, recession. It happened again back in this 2020-21 during the pandemic. It happened again. It tightened up very strongly, and then we have a recession. So where are we right now? We are just basically a couple of months away from the same number, about 60% level. So if the domestic banks realize that they have to keep on continuing to tighten because the interest is going up, more depositors are removing funds from their banks and going to the money market, definitely it's all right. This will breach this level. And when that happens, based on what happened in year 2000 to 08 to 2020, come on guys, it's just a matter of time. We're going to see that recession coming in. So this is a good time for you to learn a skill, pick up something to do, because you don't want for your boss to sack you at a time. All right. So we have a webinar coming in on 26th of August. It's a Saturday at 10 a.m. We believe that there will be a technical recession coming in, and we want you to come on and listen to us. And of course, we have shown that students have profited from it. One of our students basically used a $2,500 capital to profit nearly $3,000 in 10 trading days. We'll show you step by step how she did it, and you can actually do it on your own yourself, right? And of course, you can get a potential $200 voucher. Terms and conditions apply. All right. So guys, register right now and come for this webinar. I'll see you on Saturday. This is Cal signing off. Take care. Like, subscribe, and share my video. Take care. Bye-bye.